Joining us now to discuss the crypto markets is Options Insights founder, Imran Lakha. Welcome, Imran.
Hi, thanks for having me.
Glad to see you. We're seeing Bitcoin at around 23.5 right now. In your note, you noted that there's some short gamma going on in the market. Did that have anything to do with where we are today from getting away from the $25,000 mark and seeing that as a resistance?
So just to give you some context, so in the last couple of weeks, there's been quite a lot of upside call buying going on in crypto, as it's kind of been decoupling from a lot of other macro assets. People have been anticipating a potential break of that key level at 25.5K. And should that have broken, arguably we had a run up towards about 28K. So quite a lot of call buying activity came in. Volume spiked. I think we had like a $5 billion notional week on Deribit, not last week, the week before. And then when the macro just proved too heavy and too much for it, the PCE data came out in the US. The dollar obviously rallied on that, and Fed rate expectations continued charging higher with terminal rates at 5.4. Cryptos just couldn't continue that decoupling. So we saw a lot of that call buying that had been taking the street short upside volatility and kind of fueling some of that squeeze got taken back out, because the people who bought those calls then came and sold them back. And you could see that by the fact that implied vols got pretty crushed second half of last week, back to quite low levels again, as those calls got unwound, basically.
So stepping back on a bigger picture here, of course, we're seeing a sort of a decline right now in the amount of stablecoins outstanding. Does that have any effect also on volatility in the crypto markets? Are we seeing the fact that you can't do as much leverage anymore, or at least there's not as much interest in leverage when you have some of the big players in leverage taken out last year, of course, and then in most recent days, this decline in BUSD particularly. Does that have any effect in the volatilities that we're seeing right now?
Yeah, I mean, I think in general we've seen volatility decline quite heavily after the big FTX blow up. Whilst we did go down, we were carving out that bottom for about 2 months between November and December. And so the argument was that a lot of the bad news was kind of in now. How much worse could things get? And so the volatility got to really low levels. Like Bitcoin realized vol got into the teens, and you had S&P vols were higher than that, or realizing more than Bitcoin, which never happens. So then the downside volatility kind of got taken out, and the volatility only really reemerged when we started to see some actual buying come back and some risk appetite come back. So that's why we've seen a big flip from what was a put skew that existed for most of last year, where there was a premium for puts and calls traded at a cheaper vol. As we started to see the market could come alive again, and we started to see those big moves, 10% plus to the upside, all those skews flip round back towards calls, particularly on Bitcoin. So we saw, and when we saw that break, or the attempted break of 25K, short-dated calls were trading at like a 5 vol premium to puts. And that just shows that the market activity in options was very much being driven by calls. So what that skew is doing is really telling you whether call buyers are in or they're selling their calls back, right? But interest in puts has kind of evaporated after the market made that big bottom last year. Now, distance from that low is quite high now. We're at 23.5. We could still trade all the way back down to 16K, and that's a fair move. So implied volatility levels are cheap enough to make buying puts attractive.
Yeah.
It's just that people who own crypto kind of, at the moment, the people who still own it are kind of in it for the long haul. They're not really buying it from a tactical perspective. They're in it. They've seen the bad times. They're going to probably hold on to it.
Yeah, I saw that matrix. So you still see puts as kind of relatively cheap right now compared to calls, and you would be a buyer of puts at the moment?
Well, no. So generally, the way I like to run my crypto holdings is I'm a long-term believer in the space, but I manage my positions via putting hedges around it, as and when I think there might be some volatility, or the upside might be limited, and I don't mind selling some calls to finance some puts. So the moment the conditions are quite good to put hedges on, if you do own Bitcoin and you think, maybe we could stretch to 28K in a good scenario up into the summer, but I don't really see us materially breaking 28 to 30K before we go down again, because the macro is going to probably deteriorate still. If that's your belief, then you've got quite an easy way to hedge, where you can sell June upside in that 28K, 30K area and use that premium to buy your downside protection, knowing that if a real material crash was to take hold again, you'd be protected.
All right, Imran, thank you for your analysis. That was Options Insights founder Imran Lakha.